Palantir Technologies stock surged 10% early Tuesday after the company reported Q4 earnings and revenue results that exceeded analyst forecasts released Monday. This sharp move higher reflected renewed investor confidence, particularly as sales tied to the Trump administration and domestic commercial clients played a major role in driving results. When examining the revenue performance more closely, Palantir posted a dramatic 70% increase compared with the same period 1 year earlier, bringing total revenue to $1.4 billion. This figure comfortably topped the $1.3 billion Wall Street analysts had anticipated based on Bloomberg data. The earnings picture was equally impressive. Adjusted earnings per share climbed to 25 cents, up significantly from 14 cents in the prior year, and exceeded expectations of 23 cents. These results reinforced the company's ability to scale profitably while expanding its customer base. Looking ahead, Palantir issued guidance that further strengthened the bullish narrative. First quarter revenue guidance came in at $1.5 billion, once again surpassing analyst estimates of $1.3 billion. Extending the outlook further, the company's full-year revenue expectation of approximately $7.2 billion exceeded the street's estimate of $6.3 billion. This forward-looking confidence highlighted management's belief that demand trends remain firmly intact. A significant contributor to this performance was the strength of Palantir's domestic operations. United States commercial revenue surged 137% to $507 million, beating expectations of $479 million. At the same time, United States government revenue jumped 66% to $570 million, topping the estimated $522 million for that segment. These figures demonstrated that Palantir continues to gain traction across both private sector enterprises and government agencies, a combination few software companies can successfully maintain. Despite these strong fundamentals, Palantir stock had recently faced selling pressure. The broader software sector experienced a pullback, and concerns about valuation weighed on investor sentiment. Over the past month, shares declined roughly 12%, moving in line with weakness across the Standard and Poor's 500 index. During this period, investors expressed growing concern that advances in artificial intelligence could potentially disrupt established software companies, adding uncertainty across the industry. Addressing these concerns head-on, Chief Executive Officer Alex Karp spoke with Yahoo Finance journalist Josh Lipton ahead of the earnings release. Karp acknowledged that artificial intelligence presents both opportunity and risk, noting that technology companies operate within relatively short innovation cycles and cannot assume immunity from disruption. He also stressed that the company's internal culture and product architecture are specifically designed for the current technological landscape, describing Palantir as fundamentally different from traditional software firms. Following the earnings release, analyst sentiment shifted noticeably in Palantir's favor. William Blair analyst Louis DePalma upgraded Palantir Technologies stock to outperform from market perform, citing the recent pullback as an opportunity that made the valuation more attractive. He also referenced Palantir's ongoing work with the Trump administration, while acknowledging that some of these relationships, including work with immigration and customs enforcement, have drawn public scrutiny and criticism. As optimism spread across Wall Street, Palantir Technologies stock rallied further on the back of analyst upgrades, price target increases, and reaffirmed bullish ratings after Q4 results. The company once again delivered a standout quarter, beating revenue and earnings expectations while issuing a confident guidance that suggested sustained growth ahead. Robert W. Baird analyst William Power upgraded the stock to buy from hold and established a price target of $200. This target implies upside potential of over 35% from recent levels. Piper Sandler analyst Clark Jeffries also raised his price target, increasing it to $230 from $225, while maintaining a buy rating. This move suggested upside potential of over 55%. Meanwhile, Louis DePalma reaffirmed his buy rating and stated that he expects shares to return to prior highs in the $200 range. Collectively, these analysts share strong conviction in Palantir's long-term revenue opportunity, particularly as government and commercial contracts continue to expand. Power highlighted the company's Q4 performance as the 10th consecutive quarter of accelerating revenue growth, driven primarily by strength in United States commercial demand. He also pointed out that Q1 guidance suggests an even faster growth trajectory ahead. Additionally, he praised Palantir's turnaround in free cash flow generation and emphasized its compelling valuation outlook for 2020 2027 under bullish scenarios, calling the company one of the clearest winners in artificial intelligence. Jefferies focused on Palantir's competitive positioning within the software market toward the end of 2025. He noted that Q4 revenue growth reached 70%, paired with earnings before interest and taxes margins of 57%. This combination produced a Rule of 40 score of 127%, a metric that highlights the balance between growth and profitability. Jefferies argued that Palantir's dual strengths in United States enterprise operational artificial intelligence investments and federal modernization initiatives spanning from warfighters to Washington uniquely position the company for the fastest growing segments of the market. De Palma added further context by explaining that Palantir has effectively translated political and artificial intelligence tailwinds into widespread adoption, prompting him to adopt a longer-term valuation perspective. He noted that the company surpassed its previous Rule of 114 score with a Rule of 127 score achieved in December, driven by 70% growth and a 57% profit margin. According to De Palma, no other publicly traded software or defense company currently matches this level of combined growth and profitability. He also highlighted strong support from the United States Department of Defense for major initiatives, alongside significant agreements signed with the United Kingdom, Poland, and the North Atlantic Treaty Organization, with additional deals expected in the future. From a consensus standpoint, TipRank's data shows that Palantir holds a moderate buy rating. This assessment is based on 10 buy ratings, 7 hold ratings, and 2 sell ratings. The average price target of $189.76 implies upside potential of over 28% from current levels. Looking back over the past year, Palantir Technologies stock trading under ticker symbol PLTR has surged over 76%, reflecting a growing confidence in the company's long-term strategy and execution. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.